market, but Uno Minda is a company on our radar. Q1 was a very strong performance for them. They had a 23% revenue growth. The management is holding on to their margin guidance of 11.5% for FY25. Sunil Bohra, the Group CFO at Uno Minda, is joining in now to discuss the company's performance. Sunil, thanks a lot for joining in. It was a very strong top-line growth, 23%. But take us through the outlook, for the switches and the lighting business in Q2 and Q3. Is this 23% growth rate something that is sustainable through the course of FY25?
Thanks, Sonia. So definitely this quarter we have been able to sustain the growth momentum which we have been able to do in past. Moving forward, we do expect the momentum to continue, but as you always know that actually 90% plus kind of our products goes into direct line fitment from OEM. So that's not in our hands. So if the vehicle volume sort of continues as it has been, definitely we would like to continue this growth momentum. And as always, our endeavor has been that whatever the industry growth, because industry growth is not in our hand. So if industry grows X, definitely our endeavor is to grow at least 1.5X in medium to long term. And that's what has been the trend if you see past many quarters or years. Moving to the switches and lighting segment, which you just spoke about, lighting has been our one of the most promising business in the entire group, along with a couple of other businesses. So lighting, specifically in four-wheeler, we have consistently been gaining share of business, and also the kit value has been enhancing. We have commissioned our plant a year back in Gujarat. We are currently constructing a new plant in Khed city near Pune, specifically built for four-wheeler lighting, and that is also expected to coincide the commissioning along with some of the SOP of the new business which we have secured. So as we move forward, we do expect the momentum we have built in lighting four-wheeler specifically to continue, and we do expect to gain market share. Coming to switching business.
Sunil, just one word, since you're talking about the lighting business, right? You said it's the most promising business in the entire group. In this quarter, your revenue growth in the lighting business particularly has been 27%. You're sitting at 900 crores in terms of a base of revenues now. Can you see the same kind of growth? And now that you have your new plant at Pune as well that's going to come through, once that happens, then what kind of sustainable growth are you looking at purely for lighting?
No, that's what Sonia, I said, it is very difficult to comment specifically on the growth percentage because, again, it's linked to the OE production. But in terms of the volume buildup, if you see last Q1, while we have done 839 crores, our next quarter was roughly around 930 odd crores. So obviously, as we move forward, the base also will continue to keep increasing. So to deliver on that base, obviously, will be a challenge, but we are working on it. And hopefully with this new volumes, as I said, coming online in the Q3 and Q4, we should be able to continue that growth momentum. Last quarter we did 958 crores. Hopefully next quarter should be broadly in that range.
Okay. Well, you've held on to your margin guidance of 11.5% for the full year, right, for FY25. But there is now a scale-up that you're seeing in the four-wheeler EV segment. Given that, is there a possibility of doing better than these margins in FY25?
No, there are two different things, Sonia. Coming to, first of all, the four-wheeler EV segment, we just entered into that segment, and to get the volumes up the line will take some time. We are still at the DPR stage. And once we sort of approve the DPR, get into execution. So unlikely we will have any meaningful revenue from the four-wheeler EV per se, specifically within next 12 to 18 months. But as we move forward, this will ramp up. And as you normally would expect, any new business, you don't expect to get profitability from day one, and specifically the industry, which is in a growth phase where volumes will be low, your Capex will be high. So to come to a stabilization phase, it normally takes roughly 3 years. Moving to margins, as we last spoke about, if I remember, we said our margin guidance is 11% plus minus 50 basis points, and with this year our bias is to deliver on the top end of the range. So that's where we are on the margins.
Okay. Before, I'll come back to your business, but before that, also on the balance sheet, I wanted one thought, because your net debt is currently at 1,800 crores at the end of this quarter. Is there a possibility that you can reduce it in the subsequent quarters?
As of now, currently we are in a growth phase, and if you remember, for this year we have given a guidance of growth of Capex of something around 1,400 crores. And on top of it, we have been sort of building some of our land bank. So this year we will be investing, or already actually invested roughly around 350 crores in land, and we'll have another 150 crores odd. So in all, our Capex, including land bank, should be around 1,900 to 2,000 crores. And given the current EBITDA run rate, while we will be able to sort of fund largely our growth needs from internal accruals, it seems unlikely that we will be reducing our net debt in the next 12 months.
Sunil, hi, morning. Prashant here. You know, you're also broadening the product portfolio, right? You've sort of got this tie-up with this Japanese company for sunroofs, although it's only going to come on stream a little later. Innovance we've spoken about in the past, the Chinese company. You know, are we going to see a lot more of this? I mean, is that the way, broadening the product portfolio, the way forward?
So that has been the trend, Prashant. We have been trying to capture the possibilities of growing the product or the kit value based on what the customer needs are. But our endeavor now is that we grow more vertical and less horizontal. We have multiple products. We have over 30 business lines. So our endeavor is how do we grow deeper in terms of gaining more market share, going into newer markets, making higher exports. So basically strengthening our current product line. We are open to looking at products which are adjacent or which are sort of building on to the existing products. But if you ask me, are there any plans to sort of widen the portfolio horizontally? There might be some, but again, now the focus more is on vertical growth rather than more of horizontal growth.
That makes it clear. Sunil, just one more thing. What is the percentage of exports to the US as a proportion of your overall revenues?
So US obviously is our major export area other than Europe and ASEAN, where we domestically also manufacture. So from India, there are two products which we largely export. One is the lighting and seating. And if you see both these products, roughly will be around 4 to 5% of our total exports from India.
So US exports as a proportion of your total revenues?
Yeah, sorry, total revenues. Not total exports, total revenue.
Okay, 4 to 5% of your total revenues is US exports.
So total exports is something around, if I see, let me split down. So our total global revenues is exports is 13%. That 13%, what we do is we do last leg assembly also in the respective region. So we have some assembly lines, manufacturing lines in ASEAN, in Europe, and in US. So of that 13% pie, if we see, roughly 3 to 4% is in US.
Just one final question. The only place where I'm noticing that the growth has not come through is the seatings business for you. Your revenue is flat, and I understand that CV volumes were weak in Q1, so that hit your seatings business a bit. But you've added a few Japanese OEMs as well post your Harita acquisition. Just trying to understand on seatings particularly, do you expect it to get back to growth? If yes, what would the growth rates be?
Yeah, right, Sonia. So seatings revenue, as you rightly mentioned, has been flattish. Primarily being not only CV but also in the exports. We are the largest, one of the largest global supplier to one of our export customers. There the volumes have been softer. So that has been one of the reasons. Another reason is that in terms of our deeper aftermarket penetration, which we have been working, that is a little bit slow. But overall, the guidance which we gave when we acquired, we said we are targeting 1,500 crores of revenue in the fifth year of operations, which will be 25, 26, and we are still hopeful that we will be able to achieve that target.
All right, Sunil, we'll leave it there. Thank you very much for your time. Appreciate it here on CNBC TV18. Minda with perspective on the business and what they plan to do.